Welcome to Real Estate Exposed, helping people in San Diego buy, sell, and refinance their biggest investment, delivering you timely truths, exposing important issues, and helping you get into the right home. Here are your hosts, real estate expert Daniel Beer, top-ranked professional by sales volume at one of San Diego's largest brokerages, and his mortgage partner, Todd Pianin, with over $2 billion in funded loans.
Good morning. Good morning to you. It is awesome being here, fresh off of just a crazy, great, big, busy week with the home selling workshops. And man, it was just a blast. So good to meet so many of you that came out and met with us. And I'm here back with my radio partner, Todd. We've missed each other some of the past few weekends. So how you doing, buddy?
I'm doing good, man. It's glad to have us both back in the studio, and I have to say, wow, what an incredible week we had. I mean, that home seller seminar was, getting in front of all the listeners, talking to them, answering their questions. I mean, it was just a great experience. And I mean, for those of you that missed out, we're going to have more, but there's some takeaways that we're going to take away and that we're going to talk about from the home seller seminar that we did this last week. It was fantastic. Yeah, we're definitely going to jump into that, highlight what, the beautiful thing about presenting and teaching is that the teacher always becomes the one that learns the most. And so we're going to talk about some of our, biggest aha moments. But we're also, on today's show, going to talk about an unlikely source that is going to turn the tables. Most likely will turn the tables on this on the residential real estate market here in San Diego County and all of Southern California. There are some big weather elements that are not typically present, but that are going to play a role in our cycle over the next 12 months. So we're going to want to be aware of them and really hone in on what the strategy should be to navigate that. One of our local zip codes here in San Diego, Realtor.com, one of the most heavily trafficked websites in the country, real estate related websites. It's a search portal. Named one of our local zip codes, one of the 10 most searched zip codes by buyers in the entire country. So one of our local zip codes, buyers are searching for in heavy doses. It came in at number 10 on the list, and so we're going to talk about that and unveil what that was, what it means. We're also going to announce, or Todd's going to have an incredible announcement for us here on in the mortgage world and a big move that he's just made. So we're going to jump into that. Can't wait to talk about that. That'll be exciting.
And it's exciting, and it's really exciting for the listener, for the client, because there's just so much being brought to the table now that is a huge enhancement on the platform.
Exactly. It wasn't brought before. So I'm super excited about that. Super excited to share that with you. Dan, so let's talk about the seller seminar. Man, you rocked. You did great.
Man, it was just awesome. We had George Chamberlain show up.
Twice.
He presented, two times. He was there at 2 of the 6 workshops, and it was just so great. But, I want to talk about some of the big aha moments, just, because it's interesting as a practitioner, you put together, you put together your programs and you put together the best strategy and process for your client. And you don't always know if it translates to like their full understanding.
Right.
And it was so meaningful, like really heartfelt. I just each time would walk away with the biggest smile on my face, because when you have, when you have people approaching you afterwards and telling you what a huge impact that just made on their life,
right,
what a difference it makes, how they see there's a better way, how they're going to now reject the norm of how homes are typically sold in this market, and they're going to expect something better, and they're going to hold a higher bar. That is awesome.
Well, all I can tell you is every time after the seminar was over, I was re-energized. I mean, it just proved again and again your model, how you've just been disrupting the marketplace. And when you have that many people come up to you and go, wow, I can't believe, thanks, Dan. Thanks, Todd. I mean, just even like your fix-up tips, right? The little fix-up tips we talked about.
Intelligent fix-ups.
Intelligent fix-ups, and people are like, wow, but how you take people through the whole process as like almost, the selling process and do it on a psychological level. People got it. It was unbelievable.
Every step that's made in the selling process, every word that's used, every material that's presented, every picture that's seen, the way a buyer enters a home, walks through a home, that every element of it is part of the process, whether or not that buyer knows it. It's part of the process leading them to where we as sellers...
I hate to say it, part of your process.
Part of our process, correct. Part of our process.
I mean, let's. I don't want to take away anything from the other real estate agents and people that you're working with out there, but I mean, the process, your process.
Well, so here's what I learned most, or really just kind of really was a huge, sometimes what you learn you already kind of know, but it's reinforced.
Right.
So listening to you, Todd, talk about the market trends, and I want to share that with the listeners. So, Todd would open up the workshop with the market trends that we're seeing in today's market, and this is a very unique market. There's very unlikely coexisting elements in today's market that don't typically show up together. So here's what they are, right? We have an economy that's doing quite well. We have strong employment rates, or at least that's what they tell us.
Right, that's what they're telling us.
That's what they tell us.
Right.
We have low interest rates. We have low inventory. Low inventory meaning that there's very little on the market compared to how many people are searching for homes, right, which means that the seller in today's market is at a great advantage.
It's a seller's market.
Yet again, yes, it is a seller's market by definition. We're at 2 months inventory. When a balanced market would be considered six months,
yep,
and anything over 6 months would be considered a buyer's market. So yes, at 2 months inventory, we are in a seller's market, but it is also such a tremendous time to be a seller buyer.
Correct.
This is such a tremendous time to be a seller than buyer.
Correct.
Or if you're able to, if you can, if your finances allow you to buy and then sell. But basically, the point is making that transition.
Right.
Because Todd, when you were presenting, and we're looking at these interest rate graphs, we're looking at consumer confidence. Folks, consumer confidence today is almost at the level that it was at in 2005, 2006. Okay, back in the last peak. Consumer confidence is almost back at that level. Yet there's nothing for these incredibly confident consumers
to buy. Right.
Right?
Correct.
So when we can take advantage of that, you are selling into a great market.
Coupled with the low interest rates.
Exactly, because your buyer has that much more buying power.
Right.
But then now, of course, you've sold your house.
Right.
So now you're a buyer.
And you have so much more buying power.
You have more buying power. You can now go and lock yourself into whatever that next stage of life is. And there just seems to be so much of that. I think it's just a matter of also baby boomers as a group are hitting a certain point in their life. And their kids are kind of having kids. There's a lot. It just seems like there's a greater amount of transition in the country's demographics right now than there would be typically.
Well, I think a couple aha moments that we saw in the crowd when we went through the statistics were, what we talked about is rental rates here in San Diego, how they've gone up.
That was amazing. Share that.
That basically for the last 2 years, Dan and I have discovered that they've gone up 15 to 25% each year. And then 25% last year and 15% this year. The other aha moment was for every 1% appreciation you have in your home, or it actually can translate to 10% in monthly purchase. Your monthly mortgage payment.
Explain that in a little more detail. So if the price of a home goes up by 1%, so somebody pays 1% more for a house.
Correct.
Their mortgage payment will be roughly 10% more than it
what would have been if they would have paid 1% less for the house.
See, that's extremely powerful.
And it was like this aha moment in the crowd, and people are thinking like, oh, well, if my house goes up, then in value by 1%, am I moving buyers out of the marketplace? You are moving buyers out of the marketplace, because if their payment goes up by 10%, that could impact them a lot. I mean, you're talking about several $100,000 mortgage payment. So that would be something that I would say for sure was a very big aha moment for everybody.
Yeah, all these people that are transitioning, if you're downsizing, you're upsizing, you're having kids, your kids just moved away, you're tired of the staircase because your knees are creaky. There are so many reasons why people are making a move to the next stage in life, and what a unique environment we're in where you can sell into a phenomenal seller's market, but have the purchasing power of today's interest rate, and they're not going to stick around forever. I mean, they've already moved up from 3.4 to where are we today, Todd?
We're like at 4. What do you mean by 3.4?
Well, a number of months ago, we could have had or tell me if I'm wrong, but a number of months ago, I believe we could have had a 30-year interest rate at about 3.4.
Yes, you're probably closer to about 3 3/4 to 4% right now.
Exactly right. So we've actually gradually already come up.
Yes,
and that'll continue to move on, and so it's just time to take advantage of that. Now, folks, one thing I do want to highlight, which we highlighted at the workshop, is that none of this has anything to do with let's scare ourselves into like needing to do something right now because we're going to fall off the face of the earth and the real estate market's going to take a plunge like it did, last time around.
Which it won't, Dan, because we talked about the seminar too. Our vintage of buyers is the best vintage we've seen in our lifetime.
Exactly.
These are qualified buyers who are buying homes in, they can actually have the ability to repay their mortgages on time, even if the market took a downward turn. But you and I aren't even calling for that. We're saying that we're going to see probably average appreciation. I mean, we've talked about the seminar. We're probably going to see 6% appreciation across North San Diego County, and that's probably a 3 to 6 appreciation is a pretty much normal market.
Well, it was awesome seeing all of you at the home selling workshop. It was great to just have it so well attended. We're absolutely going to listen to your wish to do it again. We'll probably be doing it again about 2 months from now. Stay in touch with us and pay attention for next time that we have it coming. If you want to connect with us, the number is 858-356-2020. 858-356-2020. We'd love to hear from you. And coming up next, we're going to be discussing an unlikely villain in the coming real estate market. Back with you here. I'm Daniel Beer of Windermere Homes and Estates with my mortgage partner, Todd Pianin of Home Street. More on that in a moment.
Yep.
More on that in a moment. And we're fresh off our home selling workshops that were just a total success. Loved having you all. And we did promise we'd talk about an unlikely villain coming that's going to disrupt the economic cycle that we typically see in the housing market here in San Diego County. And it goes by a name.
What is this?
It has a Mexican name to it.
It does. What is it?
What I wonder what Trump would think of that.
You and Trump, you love talking about the Donald who's leading in the polls right now, by the way.
For the record, folks, I'm from Mexico City, so I get to have fun with it.
You do get to have fun with it.
So
what is this? What is this looming disaster that we're not disaster, but let's say change in the marketplace? Because I know you and I have always talked about there's really not a selling cycle in San Diego. We've talked about fall, winter, spring, summer, all good times when people historically believe that they should only sell in the summertime or they should only buy in the summertime. That's what happens notoriously throughout the country. But here in San Diego, we don't have that type of selling. We have a market all year long.
And Mother Nature might have me eating my words.
Uh-oh.
Right? Because El Nino, something that we're all familiar with here in San Diego. If you've been around Southern California for a good portion of your life, we remember 1982, 1983, that winter. That was a crushing just a crushing rainfall.
Right.
97, 98. 1997, 1998.
Yep, I remember that.
Flooding, a crushing rainfall once again, completely disrupted the rhythm of business, the rhythm of daily life. I mean, these are heavy, heavy rainfalls, which partially there might, I understand if you're thinking to yourself, and I'm thinking to myself too, partially, yeah, we need it, right? I mean, this is possibly going to have a great impact on our water situation that we have here locally that we're all now more than well aware of.
Right.
In fact, a man in Santee was arrested this past week.
For what?
For water abuse.
He was arrested?
Arrested.
Oh my God, I didn't know about that. That's crazy. What was he taking too many showers?
No, he was being very frivolous with the water wastage. So
they took him to the pokey.
But it's just an interesting thing, right? I mean, that guy, I don't think you just don't live your life ever thinking that if you end up in the can, it's going to be because of water.
Right, because you took too long of a shower or you watered your lawn too much.
So
what are some of the predictions for this El Nino, Dan? I mean,
let's paint the picture on what this looks like scientifically, and I'll just keep it really high level. Okay? An El Nino is considered to be is considered to be an environment where the waters in the Central Pacific Ocean are at least a half a degree Celsius greater than the norm, and that they're maintained at that level for several months. Okay, so the warm water.
Right.
There's a little bit that warmer water. It adds energy and moisture to the atmosphere, and in combination with changes in the wind and air pressure patterns that can alter the storm track over North America and much of the globe, actually. And so and then we get those big rains that we refer to as El Nino.
Got it. So what is it?
Okay.
What will that do to the real estate market?
Well, here's the interesting thing, though. Let me tell you where we are, which is. That's defined as when when the average or when the water temperature is at 0.5 degrees Celsius greater than the average that we normally see.
And where are we at?
For several months.
Right.
Okay. Now, the 1983 El Nino. By the way, we actually have several more El Ninos.
Right.
But not typically until we exceed about 1.5 degrees Celsius. So 3 times. Three times the entry point of an El Nino. And not, an El Nino begins at 0.5 degrees Celsius over the norm, but not until we're roughly at 1.5 degrees do we really feel a tangible effect as just people living our daily lives.
Got it.
Now, the famous 1982-83, that water temperature went to 2.1 degrees Celsius above the norm. Okay, 2.1, that's 4 times.
I'm going to write this down, 2.1.
And the 1997-1998 was at 2.3. Okay. So what they're predicting based on current measurements for this year's El Nino that's coming is that we could actually hit over 3 degrees Celsius over the norm and maintain itself for several months, causing an El Nino effect, possibly the worst we've ever seen.
So it's like 6 times what they would classify an El Nino at, basically.
It could become extremely powerful. It can disrupt business. It can have just a huge effect on how we live our lives here in Southern California. And because the reason we bring it up here is not that we're turning ourselves into meteorologists or going to, we're not having a weather program, but when we have to be aware of this because that degree of weather can alter the real estate cycle.
It's a game changer. Right? I mean, we could potentially become Seattle.
Exactly. That's exactly right.
So what would you do as how are you preparing for it? How are you going to prepare your sellers? How are you going to prepare your buyers besides buying, rubber boots and lots of umbrellas and all kinds of stuff like that? I mean, do you feel that this will affect the market because people won't want to get in the car and go out and look at homes and buy and sell? Is that kind of what you're thinking?
Homes are sold in the rain, but if I can't tell you. See, one thing we're very careful about doing on this show, and we're careful about doing in our regular practice, Todd and his mortgage business, and me with our real estate clients, is that we'd like to give sound advice through a window in history, okay, from knowing what we've come from. This degree of rain, we can no longer go by what are we used to in San Diego County.
Right.
I think that there's going to be some degree of disruption. It's something to keep an eye on. If you're thinking, hey, maybe I'm going to wait a few more months to sell, you might accelerate your time frame just by a few months, if possible. You might want to at least get in conversation with your agent and start exploring, are you going to buy? Are you going to sell? When are you going to do it?
Right.
Now, if you're a buyer, you might actually end up in a great situation because maybe other buyers are scared off or aren't as likely to be out, and you'll be out. We can pick this up coming up here next. We'll hand the baton over to Todd. He has a huge announcement for you. This is Real Estate Exposed, News Radio 600, KOGO. Mike, what are you doing starting us off with this funky music?
Exactly, Mike.
We're back with you here. I'm Dan Beer with Windermere Homes and Estates. This is Real Estate Exposed. Todd Pianin, my longtime, most trusted mortgage partner for our clients, one of our trusted lenders that we like to just refer business to whenever possible just because of the great job done, the great rates, the great care. But Todd, big changes in your landscape. What's going on?
Big changes. What we decided to do, we decided to partner ourselves up with a bank, with a real bank. And we've talked about the differences on this show between a bank and what we were before, which was sort of like a hybrid between a broker and a banker, where we had our own, we had correspondent lending and we were able to underwrite things ourselves and do things ourselves. But we decided it was time to partner with actual FDIC insured bank. And so now we're part of HomeStreetBank.com or Home Street Bank. Sorry, not .com. And I think it was after months and months of due diligence and going through the process and looking at what options are out there. I think that it's super important for our consumers and for our clients that we had the widest breadth of product, the best interest rates we could get. And we wanted to be part of something, that was bigger, larger, and more sustainable. And so that was one of the main reasons we went to it. I mean, besides the fact that we now have great interest rates, we have great programs, and they have a philosophy of always doing the right thing by their customer. It's been so far a great experience, and we're super, super excited about it.
So, I'm going to shoot some questions at you.
Hit me.
Okay, because actually I haven't even had the chance to see you much, and when I've seen you this past week, it's all been about we've just been in these workshops.
Right.
So I need to know a lot of information so we could share it with the listeners, so we could share it with our clients. Are your rates better now than they would have otherwise been?
Yes.
And well, that's a quick yes.
Yes. So one of the big things for us was, the average sales price here in San Diego is about $480,000. So what we were trying to achieve was to find somebody that also offered what's called a high balance conforming product. That was a 30-year fixed rate product that was more competitive than the street. So we actually were able, because Home Street is located in the Pacific Northwest, it's like basically, I would say, one of the largest banking institutions in the Pacific Northwest. They don't have a lot of saturation here in California. So we're able to offer on like high balance conforming, we're able to offer better interest rates than we were able to offer before when we were a hybrid.
Are you still broker out to other lenders, or does it all get financed through Home Street?
We still have the ability to, which is unique. This is one of the things we liked about Home Street, is that we still have the ability to broker out to different banking institutions if we don't have a product for it in-house.
Got it. Okay. And is the breadth of products wider? Is there more adjustable rate product, more any? What do we have today that we didn't have before?
So I'll give you an example, okay? So we just closed a transaction for a client who was in escrow on the sale of their house. They didn't qualify for the new purchase they were buying, even though their house was in escrow that they're selling. He couldn't hit them for both mortgage payments. So one of the things we were able to do, because we're a bank and because we now have a $5 billion net worth, is we funded the loan knowing that the seller, the buyer that we're working with, is going to close on his sale of his house at the end of the month, but he had to close at the beginning of the month on his purchase. So they made a business decision not to hit him for the mortgage payment, and we can just keep that loan on our books until his sale happens. So we're able to get him an unbelievable interest rate and able to close on his house, let him move his family because he was leaving the state. And we're able to do loans in other states now. So we were able to do that knowing that he was selling his house, because to them it's not that big of a deal to keep a $700,000 loan on their books for a little while.
Wow, that is that's actually tremendous.
Yes.
So they're able to overlook one of the mortgage payments for a period of time, knowing that it was about to sell.
Correct.
That is incredible. I've actually never heard that.
Yeah. So it's because here's the big thing, Dan. It's one of the main reasons we made this move.
It's almost like a bridge loan without a bridge loan.
It's a bridge loan without a bridge loan. Correct. And the other cool thing about it is that in the past, I mean, listen, the partners we've had in the past were large, and I mean by large, they had $25, $28 million tangible net worth. That was our banking platform partners. We are now, our tangible net worth of our banking partner is $5 billion. Mm-hmm. So they make business decisions, which means that they'll do things that they can afford to do more than other institutions.
So do you have portfolio product?
Oh, we have a great portfolio product.
Portfolio product meaning sometimes there are, Todd just mentioned making business decisions. And sometimes there are scenarios that we all have. And it's amazing just how sometimes somebody won't qualify for a loan on a payment they can clearly make because they've been making it, or we can't, refinance into a lower payment, yet you've never missed a payment. And so without going into more examples, basically portfolio means that it doesn't quite meet Fannie and Freddie guidelines.
Correct.
But the bank decides we're going to do this loan and keep it in-house. We're going to own this loan. We're not going to sell it off. Or if we do, we'll worry about that later. But right now we're going to make this loan because this is a capable, able, and willing borrower, and this loan makes business sense.
Exactly, and that was another draw that brought us to the table with these guys. Was they have multiple portfolio products.
Wow.
And they also have, as a portfolio product, they have lines of credit. So, meaning that before we couldn't do, we had a brokered product that we could do a line of credit for clients or consumers, but now actually we can make business decisions. We can actually do, let's say, combined loan amount of $1.5 million with 10% down.
Todd, why don't you give, because I know from experience just dealing with as many buyers as we deal with, people need to have access to somebody like you, and especially when there's unique product, right? I mean, it's. I always say, look, you have a guy that's great. Talk to another guy too. You don't actually know if you have the best product until you talk to at least a second person.
Correct.
So how can you just personally be reached outside of our common number here? How can they get in touch with you most directly? What should somebody do to reach out to you?
There's several ways they can get to us. They can go to homestreet.com/tpannon. That's my webpage on HomeStreet. You'll find it there. You can call me at the office at 858-259-4014. You can find us on our Facebook page, all over the place.
Let's give that number out one more time, Todd.
858-259-4014 is my direct line at the office.
That's great. That's Todd Pianin. One of the top, he won't tell you this, but I'll tell you this, one of the top 100 loan officers in terms of production in the United States, period. Not at HomeStreet, but in the United States. So you're talking to a really true industry expert with a pristine record, a pristine ethics record. This is why we do business with you, when we have an option to, quite frankly, do it with just about anybody we'd want to.
Exactly. I mean, you do, and we have to earn your business. And Dan, we've done business together for a long time, and I know that this was a shocker to you when I made this change because I've been so anti-big bank and talked so.
Well, this is different.
Yeah.
This doesn't smell like B of A.
It's not B of A.
It doesn't smell like Chase.
Correct.
This smells like an agile, business-oriented bank with great product, great rates, and frankly, if you're behind it, I'm behind it. I don't really have to do any more investigating than that.
Love you for that, Dan. Love you for that.
That's awesome. That's awesome. So we're going to head in to the break here, and coming up next, we're going to highlight zip code that Realtor.com has actually named one of the 10 most searched in the entire country. So people are focused on San Diego County. Inventory's low. How are you going to take advantage of that? This is Real Estate Exposed, News Radio 600 KOGO. The whole world is obsessed with Carlsbad, California.
You said it's a top 10, basically. Carlsbad, California. Explain this to me. How did it make the top 10, first off? And how do they know?
And it's here's something just really cool for as a county, we can be proud of this. And this is Real Estate Exposed. I'm Dan Beer with Windermere Homes and Estates, Todd Pianin of HomeStreet, and something really cool. Realtor.com put out a list of the top 10 most searched zip codes on their website by home buyers. And coming in at number 10 was our local zip code, a local Carlsbad zip code of 92010.
So, first off, riddle me this, Riddler. How do they know that it was the most searched zip code?
Well, they know that they know it was the most searched, or the 10th most searched. Whoa.
Sorry. How do they know it was the 10th most searched zip code?
Yeah, you see, riddle me this, Riddler, and you tied my tongue up. They know it was the 10th most searched zip code over the last year because Realtor.com, just like any other website, real estate site, our website, we have analytics on the back where we could actually see every search that's made, every property that's looked at, every home that's bookmarked. I mean, they track everything that actually happens. And so this is so significant. This is awesome. I mean, out of, I don't know how many, and there must be thousands of zip codes in the country.
More than that, I'm sure.
And this zip code in Carlsbad came in at number 10 that were of buyers looking on the website searching for homes, and that is an awesome sign for our local market because that obviously trickles off to the surrounding areas as well because a home buyer online, sure, they might look at a zip code, but once they're actually looking at homes, they're also going to look at some of the surrounding areas. They get hooked up with their agent. They realize that might have or might not have been the right area, which, by the way, this is a great zip code.
Right.
In Carlsbad, this is kind of like a more inland portion of Carlsbad, which makes it a little bit more affordable. There's more multi-family housing as well. It's a great way to be in a fabulous part of town, in a great city, but it's just a little bit more affordable than if we'd been more coastal Carlsbad. Basically, this is just north of San Marcos.
I'd be curious to see what the sales are like. I mean, if that's if it's spiked over the last, over the last.
That would be cool to look at, yeah. To see if the actual buyers or homes pended are greater,
right?
And they might not be just because we're at that low inventory. Because regardless of how many people are looking for a home, there still has to be one for sale.
Correct. You can't find it. I mean, so one of the things you talk about is people being able to search, so they can go to the big ones like what Realtor.com, Zillow, Trulia, Redfin, but they can also search on your site, right?
Well, our website actually happens to be the most trafficked realtor-owned website in the county.
Why is that?
Well, you have your big portals.
Right.
But as far as an agent-owned site, San Diego Homefinder.com is the most heavily trafficked in the county. Why is that? It's because, before any of the, before the general agent population knew, as far as real estate agents go, to build search-oriented websites, and everybody just had a website with a picture of their dog and, their cowboy hat, and it was and their big thumbs up and their silly grin.
Right.
Well, I stripped that thing down way back, and by way back, I just mean about 2008.
Right.
I took that thing down and built an actual search portal, got it incredibly optimized for the search engines. And I'm not talking about paid placement or any of that. I'm talking truly optimized to capture a ton of traffic. And it becomes a huge benefit to our buyers and our sellers. Our sellers, well, Todd, if I was selling your home,
right,
we'd actually sit down, pull up the analytics on the backside of the website, and be able to extract every home buyer that's actually looked at in areas relevant to yours, and we'd be able to target them, call them, email them, and get well ahead as far as getting on their radar versus any of your competing sellers could, just because we have the data and they don't.
It's one of the things you talk about the home seller seminar is one of the things that you do is that you'd make these outbound calls. So you get this data from San Diego Homefinder.com. People can search. They can. Curious would be, is Carlsbad on San Diego Homefinder.com one of the what's the most heavily trafficked zip codes on San Diego Homefinder?
You're putting me on the spot there because I'd have to get with my operations manager to find out today what that looks like. Carlsbad is certainly one of them.
Right.
The 92127 zip code, 92101, 92130. 92131. It kind of mimics a lot of the areas in which we're going to do business. Chula Vista actually gets a lot of search activity on our website.
Got it.
It's pretty robust. It's extremely robust, but it's a big benefit to the seller because of what we can bring to the table, and as far as getting in front of buyers that other sellers are not able to directly target. So it's all about direct target marketing.
Right.
And for a buyer, it's great because you start working with a buyer specialist on our team, like our partner Brian, and you start working with a true dedicated buyer's agent like that, who specializes in what you're trying to find, and the communication that can go back and forth because of the tools on the backside of the website are so strong that, you're kind of in harmony. You're in a constant dance. Even when you're not actually speaking to Brian, you're speaking because
of your searches. Brian
the
can
searches, he sees them.
Right.
He's able to call you. Hey John, I noticed that you looked at that. Are we starting to get more interested in this neighborhood? Actually, yes, Brian, we are. Let's go and take a look at that. Great. I'll start digging. I'll make some phone calls. I'll hit the doors. I'll mail out. We're able to stay in sync to a greater degree than your average agent that just doesn't have access to those tools.
It's amazing. That's why you're doing so much business all year long. I mean, you're going to have one of your best years ever, right?
Well, we're going to sell about 120 homes, and it's not because of a function of us. It's a byproduct of just doing a good job over time.
Disrupting the marketplace, Dan.
If you want to talk about that in any more detail, we'd love to work with you. We'd love to reach out. We'd love to connect in person. The number is 858-356-2020. 858-356-2020. Whether you want to talk about selling your home, we could go over some of the information we shared at the workshop. Whether you want to talk about financing opportunities for a new mortgage, Todd Pianin at Home Street, he has extraordinary new product for you, and the rates are honestly eye-popping. 858-356-2020. Love you. We'll be back with you next week. This is Real Estate Exposed, News Radio 600, KOGO.